Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. Guys, I think we're bailing out the bankers at the supermarket. I'm going to talk about why that is and what you need to know in this video. Let's dive in.
Trade Genius.
Hey everybody, Bob, Trade Genius here. Peace, love, and Trade Genius. Spring into some savings with us right now. We got some great specials running. Market is in unprecedented areas right now. We think we got a good handle on it. Go to tradelikeagenius.com. Take advantage of our spring specials. Thanks for listening. See you later.
So Bob, everything's been up since COVID. Look at this chart. 30 years since food ate up this much of your income. And so it seems to me that all of this inflation stuff, see, personally, guys, I think we had a banking crisis. And so now what are we stuck with? Another public bailout. This time it's done through the supermarkets. Your food bill is going up. What do you think, Bob?
Yeah, I thought you said bakers at first. We're bailing out the bakers. Yeah, it's interesting. And this is what, we've talked about this since 2008. When we get to the point where food inflation and energy inflation start to move secularly, the Fed is trapped. And I think the Fed is trapped. Everybody and their brother, the whole stock market rip from October was predicated upon the Fed being able to bring down interest rates because they're going to be able to bring down and destroy demand in the core inflation, and they can't do it. In fact, we're reaccelerating. And so this thing with food as a percentage of GDP, look, Americans have been spoiled basically ever since the inception because of our efficient farm system. But now it's getting to the point where they can't afford it, Phil. And you brought the chart up here since 2019. And I think you're right. These bastards are so sneaky. They created a problem, and then they went ahead and they just jacked the monetary supply up, and then they created inflation, and they're going to blame everything but themselves for it. They just always try different tricks, but now it's becoming insidious, and I think it's going to be a problem for people. Look, I see it every day. You can't go to the grocery store, for a quick run, it's $25. If you go to buy stuff for your family, easily $300-$400 for some of these families now, just to be able to survive. And forget about going out to eat. We talking about going out to eat every week, and now we got to kind of down cycle, because you go out to eat, two of us, without alcohol, it's minimum $100. With alcohol, $200 with tip. And the expectation now is to jam on 20% on top of your bill. The expectation for tipping now is 20%. So the food industry restaurant industry is basically also having us subsidize them not paying people wages to match what's going on in inflation. And I think you're starting to see that affect things as well, Phil. But 25%, and we had a little bit of a flattening, and now you're seeing energy starting to pop. You're going to see food go with it. And here's the chart I think that the Biden administration should be shivering in their boots on. Food prices against wages are accelerating away from each other, and it's a big problem, because people don't have any more corners to cut. With rent, healthcare, food, and energy all moving up smartly higher, people have nowhere to go. And where it kills the economy, as we talked about this before, is non-essential services are going to get absolutely obliterated. Just watch travel and watch personal services over the next 12 months, and you're going to see the revenue falling off of them very, very, very hard.
Yep. I agree. And I think ultimately, if things play out the way we think, and we do get sort of a deflationary move with a recession, I think the Fed, for the first time in about over a decade, is going to be okay with that, because the alternative is that we get hyperinflation at this point. The situation like this with food prices, and like you said, that's the one thing they can't control is food prices. There's very little margin of error now, because if there's any hiccup in the food supply chain, whether it's a bad weather cycle, who knows, right? Could be a blight, whatever. There's no margin for error now. Food prices have gotten, because they have no room, and we have no room for more inflation on stuff. And so it becomes pretty perilous. So I think at this point, they're looking at, if we do get a recession, they're A-okay with that. And that's why I don't think they're in a hurry to cut rates either, because things are outside of their control now. And what little control they do have, they can't really let off the gas. They will cut rates, though, when the market starts to get deflationary and we have a prolonged recession. Make no mistake, they'll cut rates. But things like food prices, sure, there could be less demand for food for people going out, or people being a little more less wasteful with their food intake. But food prices are still outside the control of a lot of things that the Fed can do. And like I said, there's just very little margin for error here. So it's really not a good situation for the Fed. And keep in mind, this is something they created. This goes back to Greenspan, and everybody's getting taxed for it now.
Well, the thing about food is interesting is that even if they hold it at the agricultural level, there's 3 levels before it gets to you, and everybody's taking increasing cuts on this stuff. And so, but in a food inflationary environment, here's one of the areas that you want to own. If we can assume that we probably have 6 or 7% growth in food inflation, is that you want to own a company like Kroger, okay? Because they like food inflation. And the reason being is that they buy stuff at a certain price and they mark it up anticipating inflation. And as it goes through their inventory, their assets actually growing in value. So when you start getting a secular move higher, no matter how small it is, it's going to help companies like Kroger. And look at Kroger from its low here put in at the end of November to now, that vastly outperformed the cost of food. So those are things you want to keep in mind. And they're not the only area too. So, you can look backwards, and when you start seeing wheat prices or corn prices go up, you can buy companies like ADM that are processors of those commodities. And it doesn't really pay to get into the futures. It's too complicated for most people. But here's where you want to be. We just bought BGS Foods for earnings are tomorrow. So we're going to see it starting to get a lift too. So I think this whole sector, energy and food, I think they made a decision, Phil. I think they're going to try to solve this problem on the back of 320 million Americans and not on the back of the federal government.
Yep, another case of socializing the losses and privatizing the gains. Guys, let us know what you think. How is your food bills looking? Leave those comments below. And as always, please hit like and subscribe and let us know what you'd like us to cover. And check out our specials over at tradegenius.co. We're going to have a crazy 2024 in terms of market and market volatility. If you need help navigating that, you can get into a room full of traders. Head over to tradegenius.co and check it out. Thanks, Bob. We'll see you guys on the next episode. Take care.
Trade Genius.